America has some punishment to go through because of its fiscal irresponsibility and monetary responsibility. There's no avoiding that. It doesn't matter. Everything has to be paid for. And the nature of the dollar as a fiat currency means debt is money. That's what it became after the gold window was closed. Right? If debt is money, then if you lower the debt, then you lower the money supply. If you lower the money supply, somebody's going to default. And when somebody defaults, somebody else is going to default. And then you have a domino effect unless you print more money. There's no escaping that. When gold is going to be it's not going to be reinstated. It's just going to be unearthed. Like, oh, that's what we're sitting on. We're sitting on, a big triangle of gold. And with silver, it's a little bit of a special case because with silver, typically spikes to the historic monetary ratio of around 15-1 during monetary panics.
Gold reserves no longer serve to settle international accounts, yet they make up roughly 15% of global reserve assets. The main reason is that gold is a good hedge against exchange rate or currency risk, meaning the risk monetary authorities incur by holding foreign exchange reserves. One of the most popular and successful investments in recent years is gold. Investing in the precious metal surged to an 11-year high in 2023, and the price broke multiple records in 2024, the latest of which came in late October. It's possible that the metal could hit a new price record of $3,000 per ounce, possibly even before December 31st. Rafi Farber is a financial analyst and expert in precious metals, known for his market insights. According to him, Bitcoin's growth inadvertently strengthens the US dollar. He explains that as new funds flow into Bitcoin, they effectively finance US debt and spread inflation globally, prolonging the dollar's dominance. However, Farber underscores that, unlike Bitcoin, gold underpins the dollar and is not leveraged by financial institutions. According to the IMF's reckoning, the world's monetary and fiscal authorities held $12,347 billion in foreign exchange assets and 29,000 metric tons of gold, worth around $2.2 trillion. Discussing the dollar's value, Farber mentions the historical significance of debt. He emphasizes the role of debt in sustaining the dollar's value after it became non-convertible to gold in 1971. If all debt defaulted, money would vanish, leaving only gold reserves backing the dollar. However, America's deficit spending and inflationary policies fuel global de-dollarization. If this predicament remains unresolved, more regions may turn to alternative reserve assets like gold, further boosting gold's safe haven appeal. Based on his assessment, Rafi Farber urges Bitcoin investors to hedge with gold and silver, warning against over-reliance on Bitcoin's uncertain stability. Now, we present the clips of Rafi Farber's insights from his recent interview with Miles Franklin. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
So every time Bitcoin is or new money comes into Bitcoin, Tether has to buy more treasuries because they have to back their tokens with dollars, but they don't back them with like dollar bills. They back them with U.S. treasuries. So every time someone buys a Bitcoin, you're essentially financing the treasury debt, right? And spreading U.S. inflation out into your bank account so that the dollar has more life to it. That's how it's working. But they can't do that with gold because gold is the base of the dollar. It's not like Cantor Fitzgerald's going to go to a gold conference and say, "Well, yeah, Andy, we're going to offer you leverage on your gold coin." Like that, banks don't do that. That sounds ridiculous. Look, the way I put it, I think in my most recent post on the Endgame Investor, is I was wondering why Bitcoin has any value at all, or why the dollar really has any value at all after the closing of the gold window. And the answer is because at that point in 1971, when the dollar became totally non-convertible at all, what remained was that people still had debts to each other denominated in dollars, right? So that a debt takes a current money and translates into the past, because what's debt? You're going to pay back this money from the past into the future. It's a time chain, right? So the fact that the debt still has value means the dollar still has value. So if all debt is defaulted on, all that money disappears because money is debt, and then you're left with the gold that's left over on the balance sheet of the Fed, for which the dollar is the liability unit. But Bitcoin the reason it cannot survive a dollar crash if the dollar completely becomes worthless is that nobody owes anything to anybody denominated in Bitcoin. Nobody ever will, because that would be insane. Nobody would ever take a loan out denominated in Bitcoin. They could go bankrupt in a day. So the minute the dollar falls, no one's going to owe anything in Bitcoin terms, and Bitcoin falls too. Going back to the dichotomy between Keynesian economics and Austrian economics, this is a logical point. You can't really argue it empirically. I mean, I could be wrong about the logic. I could be missing something. I don't see how I can be. And I'm happy for all the Bitcoiners who are so rich now. And I'm telling you, you don't even have to sell all of it or even most of it. Have a little bit of gold and silver in case this is not exactly what you think it is.
In the interview, Rafi Farber predicts that gold and silver will continue gaining purchasing power, outperforming commodities and stocks long-term. He mentions gold's consistent edge over the S&P 500 since 1971. Farber suggests that stock-heavy investors may soon see limited real gains versus gold. In 2024, gold prices reached record highs, showcasing strong performance along with equities, a rare dual rally that enhances portfolio diversification potential. Gold's price appreciated by more than 10% in 2017, 2019, 2020, 2023, and 2024. These years were strong on the equity side, with double-digit S&P 500 returns in each of these years. In 2024, gold has outperformed the S&P 500 year-to-date, bolstered by factors such as Federal Reserve rate cuts and economic uncertainty. As inflation remains close to historical averages, gold offers investors an asset that maintains intrinsic value even in fluctuating markets. Regarding monetary crises, Farber argues that silver becomes vital for trade as gold is impractical for daily use. He notes the gold-to-silver ratio often drops to 15-1, making silver essential. Let's get back to the interview.
So long-term, gold and silver, their purchasing power is going to go up and up and up. If you look at a chart of silver versus other commodities, or gold versus other commodities, gold has been outperforming other commodities for 20, 30 years now. It's going to keep going. That's what makes gold and silver a good money, is that it gradually rises in purchasing power over a very long period of time. Relative to stocks, I think gold and silver are going to go much, much higher. And because we're still pretty pathetic in gold versus the S&P 500, for example. And I think that once that ratio really starts to turn and head higher, then people with a whole bunch of stocks in their portfolios are going to realize that they're not really making money because versus gold, they're not really performing. And if you look at a chart of the Dow and the S&P versus gold since 1971, it's pretty even. When gold is going to be it's not going to be reinstated. It's just going to be unearthed. Like, oh, that's what we're sitting on. We're sitting on, a big triangle of gold. That's what we're on. And with silver, that's a little bit of a special case, because with silver, that typically spikes to the historic monetary ratio of around 15-1 during monetary panics.
UBS is bullish on gold in 2025, citing lower interest rates, geopolitical risks, and a strong dollar as potential investor and central bank buying drivers. Given the future of gold, silver, and Bitcoin, how should investors balance their portfolios to safeguard against economic instability? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.